Let's start in East Africa. Kenya's government could potentially offload more of its stake in the telecom service provider Safaricom. The government is looking to raise at least $1.2 billion in the 2025-2026 fiscal year through the sale of stakes in companies it has a share in. The government currently owns 35% of the operator after it sold a 25% stake in it through an initial public offering in 2008. The South African grocery group Pick n Pay has recorded a narrower full-year loss before tax, reflecting a lower trading loss in its core supermarket business. Losses before taxes and capital items came in at $13.3 million in the 52 weeks ending on the 2nd of March, compared to a loss of $78 million the prior year. The full-year trading loss in its core Pick n Pay business narrowed by $56 million. Now, overall group turnover was up by nearly 6% to $6.64 billion, buoyed by 13.2% growth in the discount grocery chain Boxer and a 1.9% growth from its Pick n Pay business. The group further adds that it anticipates the Pick n Pay core business to break even on a trading profit for lease interest basis in the fiscal year 2028. Vivo Energy's revenues in Kenya declined for a second consecutive year, even as fuel demand picked up. Now, the company reported revenues of $1.47 billion for the year ending in December 2024, marking an $84 million decline compared to the $1.55 billion it posted in 2023. Despite a 7.3% increase in national fuel consumption in the last half of 2024, Vivo Energy saw its market share slip to 21.34% compared to 22.07%. The company attributes that revenue decline to a mix of factors, including fuel price volatility, efficiency gains from combustion engines, and a gradual shift among commercial clients towards alternative energy sources. And finally, Volvo will cut around 3,000 mostly white-collar jobs as part of a broader restructuring plan announced last month. This comes as the car makers adjusting to higher costs, a slowdown in electric vehicle demand around the planet, but also much greater uncertainty around trade conditions. The layoffs represent around 15% of the company's office staff, with close to 3/4 of those job losses expected to occur in Sweden and the remainder in the company's operations around the world. Those are your company headlines.